Hello, Face. Hello, Face Warriors. Turnaround Tuesday. How are you? So yesterday I talked about with the dollar breaking down that the metals really weren't that impressive, and gold gave up a lot of its $6 gains. So similar situation with silver. The only thing that gives me pause is this confirmed high. I would love to see one more push up to the high, take out these highs, because we'll have massive divergence in silver if that happens. Also, Steve showed that the gold-silver ratio was at support and could bounce, and that's kind of what's happening today with gold being a bit weaker. So similar situation with gold, tried it yesterday, worked for a few bucks, and we're really just hanging here on the cliff. I think 1250 is doable down the road, but looking for another re-entry. Flat right now, so probably just straight lines here. And we're getting the pullback in euro. I'm not going to cover it because Blake wants to. I saw on Twitter that he's going to be covering this. Looking at the end on a turnaround Tuesday, I'm tempted. Not that I think it's going to go all the way back to this low, but why can't we retrace back to 107.60, something like that, which were important numbers before we had the bear raid that made the charts look like this. So perhaps some kind of pullback from here, which is where we're starting to get full candles. 680 to 109 is 220. Why not 110 back? And perhaps even if this isn't the beginning of the end in stock indexes for us to end up trading back to new lows, why can't we come back here to 2520, 2490 before another assault if it's going to continue to head higher? Also, we're getting the typical breakdown in the Dixie, and not that much follow through yet. I guess the question is, can we close back above 96 or not? I have a great guest today. Shintan has been tweeting in my stream for a long time. He's an excellent technician, so stick around for him. I believe there might be some announcements for people that have been waiting for a promo. I saw it on Skype. I know, Martin, you've sent me DMs, and some people have sent me DMs on Twitter about, was there going to be some type of promotional offer? So I think we're a few days away from that part of it. Blake, am I correct? I fell asleep I slept through the meeting yesterday, so I'm not exactly up to speed on the promo. Are you there, buddy?
Can you hear me?
Yeah. Got you.
It might be tomorrow.
Okay.
It might be.
All right. So there's a little hint.
What happened to you yesterday?
I just laid down and woke up at I don't know, 10, and
I get it.
And I said, I asked Paulie, I said, "Oh, did I miss the meeting?" And he said with glee, "Yes, you did, Dale." Now I'm not the only one that falls asleep.
You know what? I miss meetings too, so it's all good.
Okay, buddy. So you have some thoughts on euro. I saw on Twitter that you want to cover. So we're getting this little pullback. Is your bias still a breakout to the upside, Blake? And it's just a little pullback here.
Oh, for the euro dollar, yeah. With the economic data that was so poor overnight, I'm surprised that the euro isn't a lot lower. And because it's not lower, and it's holding above the 114.25 level. The risk is still higher, and I'm pulling for a breakout. I'm long because I picked up long euro at 42 overnight, and I did that actually in Asian trade. So
okay,
because my thoughts were, hey, as long as we stay above this 114.25, I'm gonna stay long. Now that doesn't mean it's gonna. It will stay long, or it will hold up here, but I think that the risk is starting to build to an upside break, especially with the government shutdown. We have Trump is speaking tonight at 9 p.m. He's addressing the nation in a 10-minute ordeal. So my assumption is he's going to say, the government's going to remain shut down until the Democrats bend on his border fence demands. He doesn't care, and it's actually really starting to pull at some of the GOP leaders. I mean, because you imagine our lawmakers represent their constituents, yeah, and when they're suffering, no matter how they feel, they're likely to start, taking the side of their constituents and saying, hey, my people are not getting paid, or my people are out of work, my people are, this can't last, much longer, and they might, join the other side. So
there's one other option, bro. He could, he's talked about it during a press conference. Maybe he's going there to declare it a national emergency so he could get funding elsewhere. I think it comes out of the defense budget if he does it, and there'll be lawsuits and so forth to stop that. But yeah, I don't think that'd be a great precedent to call a national emergency over a political argument when it's really not an emergency. Maybe to some people it seems like it, but then we get used to Trump calling national emergencies, and who knows what the next one is. You know what I mean?
Yeah, and so this is a situation where you have a loss in confidence of the dollar, and we could see that. Remember, the market's still short the euro, so you have a situation where the euro could squeeze. And yeah, you could argue and say, well, European data is weak, and I mean, you saw the last night's industrial production numbers out of Europe. They're poor, but that doesn't mean, first of all, it doesn't mean that U.S. economic data isn't deteriorating, and then secondly, it doesn't mean that the market can't get squeezed, especially when you're positioned so long the dollar right now.
Yeah, people don't believe that the gold was in the same position down there under 1,200. Okay, and it was a huge short position in gold, and we got $100 rally out of it. So euro similarly positioned with the COT, isn't it?
I think so. I do think so. So and I'll go ahead and take the chart over here.
Okay, like the outer limits, you're taking control of my TV. You probably don't remember that one.
The outer limits? No, that was being sub 50 years old. I do not remember that.
Okay, buddy.
But I'm close. I'm close. And that's probably one of those things that my parents watched when I was just a wee lad.
Yeah.
So when you have the euro, you have this trend line that we're actually above right now. Now I'm not convinced about any euro upside until we get above 115. I mean, and like I said, I'm long the euro like right at current levels. So it's not, I'm not, thoroughly convinced yet that we're breaking higher. However, a break above 115 would, do the trick for me. Now, one of the risks that are emerging for the dollar bearish potential is that the S&P is in the resistance zone. We're right up to the upper end of the resistance zone, which I think the S&P should stop here around 2,600. And if that's the case, then the dollar might actually catch a bid just on from a risk aversion standpoint. But for now, as long as we trade above this 114, you can say 114.20 right there. As long as we trade above that, I still think the risk is to the upside. Now, I drew this out here this morning, not for anything more than your visual delight, but really it's 115 that's got to be broken at this point. And the market, ultimately, sorry, I'm getting messages on Bloomberg from a equity market trader who dipped his toe into the FX market, and he's like, he basically said, "Screw you, FX people. Worst thing in the world to trade. Things work for one day, maybe two." That's all it gives you.
Tell them you've been short CAD yen for 3 weeks.
Yeah. Well, New Zealand. I've been short New Zealand CAD, so hey, I take that.
Yeah.
Mother mofo. Yeah. So, and speaking of New Zealand CAD, this has actually been a great trade. As it's been, really making its way lower. We're at trend lows right now. We're, at some horizontal support, and for those of you that have been listening, and you guys know, for the last couple weeks I've been short this thing. So I'm, and it's been a pretty aggressive position too for me. And so it's been doing well, but that's not the best trade out there right now. The best trade has been like the Euro Canadian or the Pound Canadian. Those have really taken it in the Aussie Canadian during this little, push lower was really good. But anyway, I'm still just keeping an eye on the euro dollar. Oh, here we are, near our lows of the session, but I'm not super excited about the market today because we're just not doing anything at this moment. But a breach above 114 or 115 would be a big deal, and then a push below 114, and then I'm going to have to revisit and just kind of stand aside and wait for maybe range lows again, which could realistically be the case. Now, one of the other things that I think we should look at is going into tomorrow. We have the Bank of Canada, and if you see the dollar Canadian is below channel support, this is a pretty severe breakdown in the US dollar Canadian. And I'm going to go ahead and take this arrow and I'm going to go ahead and put it right back up somewhere around here. Okay. And if we get any rally to 133, 133.50, 133.60, so let's imagine we do something like this.
Yeah.
Right. Got to use that as a, these, let me go like that, that. Let me get rid of these dots and all this crap. Let's make this blue. So if we get any move that looks like this, you gotta look at shorting into any rally right now in the US dollar Canadian, because this breakdown point right here takes us all the way back to, this is the June spike highs. So breaking through that was a big deal. Now any rally back to it is going to be sold. And so I would hope for a 50 pip rally between today and tomorrow to sell into that. Matter of fact, I should probably put out an order just to have it out there while I'm not, if I'm not paying attention, which I have an order out now-ish. Yep, I got an order out there now. But I'd love to be a seller up there. I mean, the dollar Canadian is a little oversold at this point. You can see it's pretty oversold on a 4-hour chart. But any type of rally should be met with selling. And remember, we've got the Bank of Canada tomorrow, and there's the decision. There's a press conference. The press conference is at 11:15 a.m. Eastern. Now, I was looking on like investing.com, their calendar for tomorrow, has the meeting or at 8 a.m. my time, which would be 10 a.m. Eastern, and then there's the press conference should be, and it's not well, it's here, and it says at 9 a.m., which would be 11 a.m. Eastern. There's a press conference. So actually, you know what? That's 9 a.m. Eastern, but I think that's not correct. I think I have to go back to the Bank Bank of Canada website to check that. But just know that there is a press conference tomorrow, so that's going to be pretty important. And one of the reasons why the Bank of Canada is going to be such a big deal is because we have, the U.S., and I explained this yesterday, but I'll explain it again today. We have the U.S. that is probably going to be at neutral with rates, and the Bank of Canada has room to raise rates, and they are raising rates tomorrow as well. So, but if they continue to raise rates even further, then we should see the Canadian continue to strengthen, and the dollar Canadian, drop through the through the lower 131 and maybe 130, excuse me, and probably towards 130, the figure, which is and would be channel support or near channel support, somewhere down here. So I think this 200-day moving average and this channel support are all viable targets for the dollar Canadian moving forward. And you can see the dollar Canadian continues to slip, and it trades heavy. I mean, it's 20 pips off the lows, but still it is trading overall very heavy, very ugly candles the last week. So now you just have to sell rallies if you get them. Wait, hold on really quick. Trump says talks with China are going very well, I think. Going very well. This is that just came across Bloomberg just moments ago. Hold on. So here, if you guys want to see some of the Bloomberg news headlines as they hit the wires, this is what it looks like for those of you that haven't seen it. So Trump says the trade talks with China are going very well, and that spiked futures up towards highs. So let me stop here for a second. And I was talking about the euro dollar and telling you how important 115 is. Do you know what's even more important if you're talking about risk appetite? Is this euro yen. You got to watch the euro yen, because this euro yen is at the breakdown point. Okay, so the breakdown point being this 124.50 to 124. You can let me duplicate that really quick, clone it, and those lows right there come in at 124.88. So if the euro yen breaks above, let's just say 125, that's going to be extremely bullish for the euro yen, and that's going to be a pretty massive shakeout, in my opinion. One of the other things that I had here, and I think I removed it, so I'm going to go ahead and put it back on. Take this low to this high, and let's go ahead and extend that out. Okay. So we hit of the last move, the major move higher, from August of last year to September, we basically tagged the 161% extension before bouncing. And I know that was in a very high period of volatility during low liquidity, but regardless, the risk is if we break back above 125, we could squeeze through 126, quite possibly even up towards 128 again. So I think you got to be careful, and especially if you're trading the euro dollar, you've got to be careful, because if the euro yen really starts to squeeze, it's going to take the euro dollar up with it. And if stocks continue higher and stocks continue to hold a bid, that is a risk. Now, I'm gonna give you a spoiler really quick regarding the S&P. Joe Perry, who is on our team, on our ForexAnalytix team, he was on Real Vision TV, Raoul Paul's network, and if you guys, it's a subscription network with interviews. It's pretty high-end investors and traders that are showcased on that network. Joe was on there last week talking about the 2600 level as being a really key resistance for the S&P, and he was looking for a possible short up here around 2600. That looks pretty doable. And if we go from where we're currently at and we rally another 30 S&P points, if we rally another 30 S&P points, that could be the catalyst that drives the euro dollar above 125 and maybe the euro dollar towards 115, if not a squeeze above it. So keep in mind the S&P is still pretty well bid considering it is Tuesday. So, you know, a lot of people are looking for turnaround Tuesday, but that doesn't mean it's going to happen. But a lot of people are looking for a potential turn lower. But we could continue to squeeze, especially after the big reversals we've seen in the last 2 weeks. So with that being said, I want to talk to my colleagues, Steve and Stelios. I'm sure they're here this morning. Good morning, gentlemen.
Yes, but we don't want to talk to you.
Good morning.
Good. Then don't talk to me.
Morning.
And good morning. Talk to tell everybody we have some sort of special seasonal offer for ForexAnalytix traders, right?
We do. It's starting tomorrow morning European hours. Yes, it's going to be like New Year offer. It's going to last only for a few days. And it's going to be, I think we can give it away. I mean, it's less than a day. So it's going to be a 20% discount in monthly plans, 25% discount in semi-annual plans, and 30% discount to annual plans. And it's just going to be up for a few days, as I...
Oh, wow. So, all right. So, guys, so let me make 2 points. First of all, we only offer specials to get into the ForexAnalytix community like this a few times a year. Our best offer is in September when the new, we call it the new trading season starts. You know, everybody comes off of summer holidays and then the new trading. That's our best offer. This is probably the equivalent of the second best offer that we have all year long. So unless you want to wait another 7 or 8 months to try to get a better price, well, that's 7 or 8 months of lost potential profits on trades. So make sure you take advantage of that, and it's only going to be up for a few days, and that starts tomorrow morning in European hours. So thanks, Steve, for explaining that. Now, Stelios, I saw something, and maybe you can clarify that it looks like the Brexit vote is going to happen January 15th. Is that correct?
This is the latest. I don't think it's actually firm yet, but that's the latest talk. So yes,
okay.
If they don't postpone again.
yeah. So I wouldn't get my hopes up, but that's how it looks like right now.
Okay, so you know, one of the things that I want to point out regarding the cable is if the euro dollar, let's say I'm right, and you know, for argument's sake, let's just say I'm right, and the euro pushes to 115 or above 115. One thing that I want to keep an eye on with the cable is a potential move above this 128 and change, because if we move above 128, and this may be a product of dollar weakness, not cable strength, but if the euro breaks above 115, you have to look at the cable possibly squeezing to 130. Even ahead of this key Brexit vote, and let's just say, for argument's sake, it happens on the 15th. We have a week between now and then. So if the dollar does push lower and the euro rallies a little bit, it could drag the cable above this resistance. I'm actually keeping a very close eye on this, 50% retracement, which has held us, but really it's like 128 and change, and if that breaks, then I think that's going to be pretty bullish, the cable. So just something that I'm paying attention to personally.
Cool. I mean, my thought actually regarding the this pending vote in the UK Parliament is Theresa May postponed it last time in December because it was clear that she was nowhere near getting it passed. Now she has the option, theoretically, of postponing it more, but it looks like she wants to put it through on the 15th. I wonder why that is. Just curious, unless something has changed. But I personally think she's probably going to push it a bit further forward.
Well, isn't it more of I mean, she's just going to push it forward if she knows she has the votes. I mean, that's...
Yeah, actually, our friend Simon is saying it's been confirmed. I wasn't aware of that, so maybe it is confirmed for the 15th.
Wow. And Simon's in our chat room. He is in the UK, so, and he pays very close attention to Political
that
front end.
might
I'm
be-
sure Amanda might be confirming that as well.
That might be actually another Simon. Anyway, we have more than one Simon listening to us.
What? There's more than one Simon out there? Get out of here. Simon in our chat room, he's putting up question marks. So, well, okay. So I think we need to keep a real close eye on the cable. I think the cable's, it's threatening. It's getting up towards the 128 level. And not only is the market extremely short euros, the market is extremely short the cable. So that if there's one currency that's really ripe for a squeeze higher, it'd be the pound. And so obviously I have to keep one eye on it all the time, and I'm sure you guys are as well. So I'm going to pass it over to my colleague Steve and Stelios. If you have not visited our partners for this webinar, they sponsor our webinar, Forest Park FX. They will help you join the ForexAnalytix community, possibly free through your trading through our reimbursement program. And you can see a reimbursement program right on our website. Or if you are in the United States and you want some cashback rebates, they can help you with that as well. So guys, I'm gonna pass it over to you, and thank you very much for everybody for being here. But make sure you stick around because Coach, you have a really good interview today, don't you?
Yeah, Shinten Patel has been tweeting excellent charts in my stream for quite a few years. I said, well, you know what? I'm going to invite him, and he accepted. So looking forward to what he's seen in the markets.
Yeah, it's a long-time listener of the FACE webinar, so that's great.
Okay, buddy. Yeah,
right.
We like it's not always the most famous guys, Blake, or the people with the most followers that are always the best traders. I mean, sometimes they're just the best marketers.
Yeah, you look at Ronnie Schlapper. He doesn't have any social media presence at all, and he is really the best trader I've ever met. So
yeah, he's famous though. But I mean, there are diamonds in the rough,
True.
and
I
look for them, and want to lift them up and validate them by bringing them in.
Awesome.
Probably Gartman is at the other side of the spectrum.
Yeah, Mr. Fade. I mean, that's such a terrible reputation. I saw a tweet where some guy said, I was getting ready to buy the S&Ps, but then I
saw that you took bullets.
Yeah. Oh God. Anyway,
that's horrifying. Bye, Blake.
All right, Blake.
See you later, mate. Bye-bye.
Yeah. So anyway, that's the commodity king, they call it. That kingdom's got to have a lot of debt.
Oh yeah, for sure.
Yeah. All right. Deficits, I mean. Anyway.
Yeah.
How you doing, Boro?
I'm good, Coach. I'm good. We've had a good start of the year so far, so I can't really complain. We are getting healthier by the day, so I can't complain about that either.
Good.
So it seems it's going good. As we said before, we'll also have an offer for our wannabe subscribers starting tomorrow morning. So I think that's a good opportunity for them as well. Now, having to do with the markets, to begin with, first of all, let me say that Andre is with us. So Andre is going to go ahead because we haven't had a recent view of, we had the holidays, etc. So we haven't had a recent view of what he thinks about any interesting harmonic setups. And anyhow, the market hasn't really done anything spectacular since yesterday. So of course, I'm going to go over a few highlights, but it's not going to take that long because many things haven't really changed since what we had yesterday, and that's going to be a great opportunity for Andre to share what he's looking for with us. So,
Steve, I do remember yesterday, we had that reversal day in gold on Friday. And then you said, it takes more than one reversal day, and it was, about $6 or $7, $8 higher yesterday. I'm wondering if yesterday and today's action starts to reinforce Friday's candle.
First of all, and you know that I'm not doing that for marketing reasons, but the first signs of a reversal. Let me see if we still have that analysis because we don't keep endless days of analysis, but. Let's see if we have it. So let's go to basic technical analysis.
I think it's going to keep falling because I covered my shorts about, I don't know, $7 ago.
Just look at this. This is my analysis from Friday, both on silver and gold. Silver hit the rectangle's target and horizontal resistance area, right? And here's the 4-hour chart I posted with that. Here it is.
Okay.
And is now retreating from there. That would be a key lever for the bulls to break and the bears to defend. 1560 support from this point on. And at the same time, that was early on Friday, I wrote for gold, and here it is, and here's the chart I posted back then. Here it is. As you see, we wrote, after overthrowing the ascending wedge and almost testing the psychological 1300 level. By the way, we did test the 1300 level in the futures market. We didn't do so in the spot market. Gold is now reversing lower. Watch out here because a break of the trend line support might open up a much bigger move to the downside. So,
are we getting that breakdown?
Yeah, for ForexAnalytix subscribers, that means that they got a very, very early warning that, and here it is on the daily chart now, right? We got a very, very early warning that something might be changing here. And if you notice on the daily chart, because a lot of people don't know that, but technical analysis also works on oscillators, right? So, for example, we had this ascending channel here in the RSI, which, as you see, we are currently testing as support at the moment. And we also have this huge ascending trend line support that we broke some time ago. We actually broke it in July to the downside, which we now broke to the upside. And let's see if that actually was, a real breakout or perhaps a false breakout. So at the same time that we're going to be testing this trend line, we're also testing this trend line in the RSI. And I'm really curious to see what's going to happen from here, because to be honest, I wouldn't rule out further declines in both of those metals. I think that, today, tomorrow, we're going to know quite soon what's happening here with the metals. One thing is for sure, silver still looks more bullish than gold, because as you see, silver has posted 3 consecutive indecision candles, in essence, right? So the pullback in silver so far, I have to say that it looks mostly corrective. That's what makes me more cautious with calling a reversal in gold as well. So I wouldn't,
you know what else, Steve, on the silver, which made me cautious and booked it. I tried it yesterday. It worked for a little bit. Is that you have it on the daily, but even if you go to shorter time frames,
sure. Let's go to the 4 hour.
You have confirmed highs in the silver at the highs. There was no divergence before this pullback. Yeah. Oh, you have it on the 4. Yeah, but it's just such a high. I don't think. Yeah, exactly. It didn't diverge.
That's what I wanted to say. You don't really pay attention to divergences that happen so high in the RSI and are so subtle anyhow. I mean, a subtle divergence near an 80 reading is not really. Yeah, it's not really something you should be.
The 1 hour is clear. It shows a clear confirmed high.
I believe you. And as you see here, this 2 that says here, it's actually the 100% extension of the rectangle range. So, perfect tag of this target. As I said, the pullback so far doesn't look impulsive to me. So we've already fulfilled this. So I wouldn't be surprised if, we squeeze people once more, before seeing at least a deeper correction lower. And, that might be the fate of gold as well. We talked yesterday about the possible little rebound in the gold silver ratio, and here it is. We did find some kind of a respite here just above this confluence of supports, so we might see like a little bit of a bigger jump from here. But I have to admit that it looks like the gold silver ratio, at least for one more push lower, it should be a sell on rallies type of setup. Okay, that's brewing here. Stelio, I'm guessing that's your dog?
No, it's my neighbor dog. Steve, how are you? This is not the one from Stealth. I'm sorry. I'm not sure if I'm muted myself, but somehow I have my microphone on.
No problem, mate. No problem whatsoever. Okay, a couple of things. I'm going to give you a freebie. Those that were in the chat room know that I tried to top pick it and I did quite a good job. I shorted today pound Aussie at 179.30. The reason you can clearly see it here on the 4-hour chart, this looks to me like a very clearly defined flag, pennant. Yeah, that doesn't really matter how you're going to interpret it. So, you know, I took, you know, I took a, you know, like a small position here, and I intend to actually add to it once we confirm a breakdown below here. I do think that pound Aussie looks really good for at least, I mean, even if this move is corrected to the downside, I think it looks really good for at least one more leg lower. And, you know, why not? I'm not only taking like longer term setups, you know, it's something that looks quite appealing to me. And between all the euro and pound pairs that we had a look at them yesterday, I think it's one of the most appealing ones. So, you know, I did take a stab. I'm now, you know, I find myself more than 50 pips in the money. So, you know, I've already taken the risk off the table for this one. As I said, if you were in the chat room, you would be able to follow that if you wished, of course, on time. So it has its benefits being a ForexAnalytix subscriber, obviously. We have a friend asking for Euro Kiwi. Euro Kiwi, as you see, this can also be a bear flag, but I have to say that if you compare, for example, Euro Kiwi with pound Aussie that we saw, clearly pound Aussie looks a lot more weak, right? So that's why it's not accidental that instead of choosing, you know, Euro Kiwi or pound Kiwi or even Euro Aussie, it chose between the four of them, pound Aussie, and I think it was the right choice to make. Now, we had a question previously, and I'm going to go over that, and then I'm going to give time to Andre, because as I said, not much has moved since yesterday in the markets. Obviously, we have a rebound, and I've also started, you know, I started today at the highs, accumulating slowly a position here in the S&P, because I like to start building a position as we move higher, hopefully towards 2600, perhaps a little bit higher than there, 2630. So I think that the S&P might produce more strength from here, but I would be interested to you know, to build a position and look for you know, at least one more push lower here. And one more thing I wanted to show, because I had a specific request, is the Nifty. The Nifty still looks to me quite. Oh, sorry. Let me go to the daily chart. The Nifty still looks to me in a correction. I mean, obviously, this price action cannot be interpreted as impulsive in any way. So I do think that sooner rather than later, the Nifty should produce one more leg to the downside. And if you have a look at Banks Nifty, I think that's the ticker. Let me see. Yeah, Bank Nifty. There it is. It also has a setup that has a very good risk-reward ratio. Why? Because it seems that you can see clearly, coach, here, this is the three drive formation. And as usual, you've said that many times, three drives formation usually coincide with ascending wedges. So we had a nice move to the downside. We seem to be having a recovery that seems to be in a wedge. And I think that the risk-reward ratio is quite appealing for another leg lower in this one as well. So, you know, I had a request for that, so I wanted to show those two. I'm going to pass it over to Andre. I'm going to be here, of course, so we can talk with him. Andre, I know we haven't had you on for some days now, so I'm pretty sure that you have a decent amount of setups that you're currently looking at, or that you think they're currently about to trigger. So, you know, let's start by what you think looks better, what you have the highest conviction on.
Well, I shared some of those charts that I will show here. Some gold and silver. I believe some of those who are subscribing ForexAnalytix are familiar with this chart. So this is a confluence zone between previous structure support level, the 161 extension, the 88% retracement as a minor or internal bearish bat pattern. So we are now facing a pressure zone, and as I published, the default targets for the pattern positioned at the previous structure resistance. So this is a fractal resistance level. This is considered as a weekly resistance, and we are now and synced with the default target for gold. So from here, I will not be surprised to see, as you mentioned before, the price to trade those levels. I'm not sure if the price will print a new high above. It's possible, as you mentioned. But
yeah, it is possible that we might have.
It's at this point the pattern is printed and with default targets at 38% retracement. The same for not the same pattern on silver, but we have similar expectation. This is a lower time frame event, so this is like a 4 hours time frame, and this is there's confluence between two different patterns actually. So this is the crab pattern extended at 169 extension. We see the price extending above this level, and it's now acting as a support level. Usually, what I can say about my previous experience, usually when the price violates the 168 extension as a completion point for a bearish pattern, if the price starts to trade above that level, and if then later it transforms that level into a support level, it suggests more upside momentum, and eventually that's what you were mentioning before. So a new high on silver, which may be followed by a new high on gold and on metals in general, should produce and eventually a bearish divergence once formed.
Also, don't forget, Andre, that there is also the possibility that, for example, since silver has been overperforming lately, we might get another high in silver.
On silver and moving sideways on gold,
Yes, which will be a nice divergence, to also pay attention to if you're looking for big reversal.
Yeah, well, in terms of Fibonacci ratios and the patterns, I used to say to people, okay, if the pattern fails, it is not a sign that the short will fail. So I search for a zone where I imagine or where I can expect some price reaction in that direction, in the direction of the pattern. So sometimes the price will react exactly at those Fibonacci levels, sometimes will not. If you take the example on cable versus Aussie, one of the trades that you are thinking about, I was not expecting the pattern as the price has printed the alt bat pattern at 113 extension. Let me try to get clear.
That's actually quite a nice harmonic pattern.
Yeah, it's the alt bat pattern, but before the alt bat pattern, there's the bat pattern at 88% retracement. So the market needs to fail first the default bat pattern, which is printed at 88% retracement. The market has failed the bat pattern at 88% retracement. Actually, the market has felt some pressure there. The market has reacted in a new high immediately. Then we have those news events related overnight session.
And that was a beautiful in the euros, especially and the pound.
Exactly.
Beautiful candle.
Yeah, and note that even in the middle of a chaos moment, the patterns will be printed. So when the market has failed the 88% retracement, extended a few points above to the 113, and then the market, I believe this is the correct level. We are now already trading the 38% retracement, which is by default the first target for this pattern. So at this point, I can see this level acting as, and note that we have now the 200 moving average above acting as potential resistance level, but I can see this level acting as a potential next zone for one eventual heads and shoulder if the price decides to push a few points above to print the right shoulder, I will not be surprised. Then later a breakout of this level, assuming the same criteria.
Although quite soon, let me see in how much time is that. Once this 4-hour candle actually closes, we're also going to have an evening star formation on the 4-hour chart, and given the price action that we've had in the short-term time frame, this looks quite clearly like a bear flag or whatever.
Yeah.
So I'm quite confident. I mean, I'm not a short-term trader, as you know, but one of the few setups I like to trade in what I consider short-term, because for me, short-term is like 4-hour chart. I don't look never below
those
that.
corrective structures, those flags and
are exactly those corrective structures. Yes, which have a very decent chance of actually. Yeah.
And a nice risk-reward ratio, if you but for those who are learning process, it's an interesting process to learn how to trade and how to adjust our stops or in our limits above or below those structures. It's interesting. Well, at this point we have one first wave, one first period of consolidation or a sideways momentum, and yes, I do expect a fall from there. But at the same way, it's not the first time that I get surprised, and
of course. I mean,
a few points above.
There is no certainty in the markets, but there are high probability setups and low probability setups.
But see, I'm just mentioning it because we have entered oversold conditions, moving sideways, fast, strong RSI indicator here also. Well, I believe there's also a possibility to go directly to those lows, obviously, with the 200 moving average as the next element of pressure eventually to act as a support later. But again, sometimes we expect those patterns to work at the specific price levels, and the price extend above or below, and in this case, even in the middle of a chaotic momentum or moment, the price has developed this bearish pattern, which we have two targets for the pattern. So we are just in the middle of the process. So this is just the first target at 38% retracement. So the second target will be the golden ratio at 60-on-8 retracement. But it was also an interesting trade setup for sure. Let me show you just a few of the index that I was following.
Andre, we also have a specific request for you. If you have some specific harmonic setup in the USD Swiss.
Yes, we have. We have, and those who are subscribing ForexAnalytix are completely aware, I believe, aware of this possibility. We are following this. This instrument from above. So I shared an opportunity to sell a shark pattern. Let me try to push this level. I shared it as something like this.
And you were right about the Swiss, Andre, like 3 weeks ago, when there was a little pop, but your discipline said that we were going to make lower lows. Nice call.
Yeah, it is a strong Fibonacci level. It was the 168 extension after this false breakout above. So every time I identify a false breakout, and to identify a false breakout, I need the price to fail the 127 extension from the previous swing. So it's not difficult to understand that the market has failed the 127 extension from these previous structure highs.
Not for you, maybe.
No, for those who have experience dealing with those highs and those tops and tops, I believe it's not a difficult task. But as soon as we identify a false breakout, and we need to wait, because this is not the criteria to trade. A false breakout, it's not the motive to engage the market in a bearish momentum in this case. But a false breakout and a violation of the previous structure support level, which is positioned below, will trigger my brain. Well, my brain will enter into a shark mode. So as soon as I identify the false breakout and the breakout of the supports, I will search for the 161.8 extension. This is also it gives sequence to the 5-0 pattern if the pattern starts to work. So at this point, at the 161.8 extension, in the price has nailed the 161.8 extension, I expect the 50% retracement, which by default or usually will produce some new bearish momentum. And specifically, we are trading after a long period of bullish momentum. So at this point, I can expect the price to push back into those Fibonacci levels. So at this point, the 161.8 extension is the first level where I will search for pressure. The market has achieved, well, if you need to search for a minimum retracement level, I will search for the 38% retracement. The default target is the 50%, and then new lows. At this point, I will not be surprised. At first things first, let me check the RSI. So we have no oversold conditions. I believe there's room for that to happen.
For sure, the pullback. I would agree with you trying to find a low at some point. I'm of the same view, and I think that the price action in the USD Swiss to the downside looks clearly corrective. So I think that
at least in this part, I think for now.
Exactly. Yeah. I think that selling this price
it can change, Steve. It can change. It
can, but so far it doesn't inspire that it's some kind of a strong move to the downside. So I think that it's quite dangerous trying to sell it down here. It's more likely to find some kind of a low anywhere between here and 97.50, in my opinion, than anything else, at least for a bounce, and we see from there. So I think
that. Do you know any safe FX trades?
Can you repeat, Bill? So what do you mean?
Well, because Steve said it's dangerous. I was just wondering if we take a couple of
trading
trade.
You know something, Coach? All trades are safe as long as
it.
As long as you're managing it and making sure that none of them is big enough to trade your account, right? Because not all trades can.
Just make sure.
Yeah, exactly.
So that
just
drives
make sure that you are here tomorrow, no, Steve.
Yeah, that drives home the point that it's not whether it's FX or stocks or commodities or crypto. It's not the car that that's being driven.
It's a driver.
There you go. All right, you got it, buddy. All right.
Yeah.
Anyway, Florida, Andre, I've been interviewing 7 minutes.
7 minutes. Let me try to push some of those charts for you. So this is CAD. It's also trading above the previous weekly.
But by the way, after the USD CAD, if you have something for the Bund as well, I know that you tried to sell it, and for a very good reason, because it was indeed on resistance. We have Costas asking for the Bund. So if after the USD CAD you can have a look at the Bund.
No, I can jump there.
No. Go ahead. Go ahead. Say what you think about the USD CAD, and we can.
Yes, dollar versus CAD. It's already working in our direction. So we are.
Where are you aiming for in USD CAD? What is your target?
CAD, I have a default target at. Let me check. I need dollar CAD.
Stalin wanted the Swiss, and I think Hitler wants to look at the S&Ps.
Eventually.
He wants to short them here, I
think. Default target for this pattern, for this specific pattern, is positioned at 38% retracement as usual, which is positioned. Let me change again the time frame. Which is positioned at 130.54.
Oh, okay. So we have some room to that. And to be honest, the move lower is clearly impulsive. This leg is impulsive. It doesn't mean that the whole move is going to be impulsive, which means that, in my opinion,
it has started with an impulse wave.
If this is a corrective, even if this is a corrective move, the first reaction higher should be sold, because there should be at least one more leg lower, at least. So,
I'm not sure if the price we are entering, I believe the most common of the mortals are entering oversold. I'm not entering oversold yet. I use my lower bands at 20s and my higher bands at 80s. So I like to see, and I like to check the market on extreme oversold or overbought conditions. The market, it's not there yet. Well, this is a previous structural resistance. It is the weekly resistance, finding support here. And if the market decides to
obviously selling
to print some,
right now doesn't make sense. A rebound,
a sell here, it makes no sense. If, for those who are searching for a rebound here, eventually they can try to find the situation to go long from here. But even though it's not the best risk-reward approach, unless you set your stops below the previous resistance. But even though it's not, in my opinion, it's not the best trade setup to
I think a rebound towards 134.50.
It is possible, Steve, but I lose risk. I don't know where to set my stops at this point. I can use, let's say I use a Fibonacci level to trade. Let's use a 38% retracement from this swing. I can use that level to measure my stops with a maximum of 1-to-1 risk reward. But it's in these situations I'm forced to use a 1-to-1 risk reward to trade. I can set my stops, tight stops right below. In my opinion, for me, it makes no sense. And in fact, I always like to wait for those patterns to complete. So I still position it inside.
A trade idea I can share is that we're currently at the 78.6% fib of the last leg higher that started at the 18th of December. So I think if we get lucky and we get some kind of a rebound towards 134.50, which was previous resistance and previous support, I think there's going to be an appealing risk-reward opportunity to be short somewhere there, to have a stop loss. To have a stop loss roughly at 135.80, and then aim for a retest of the December 18th low at 131.60. I think that's going to be an appealing trade to me. I mean, if we make it up there to 134.50, I'll probably take that trade.
It will be awesome. I still remaining. I still positioned inside this trade. So I just hold the trade. I have my position already at break even, so it's a free risk trade from here. And below this ascending structure trend line, I just need to remain patiently for the target if the market decides to go there. But this is dollar versus CAD. You asked me for Bund.
The Bund, Do you think that this is a false break higher that we had?
We are trading a specific Fibonacci level, which suggests that possibility and that probability. But again, I've failed previously at 88% retracement. The market has extended to the 113 extension, and I hate when this happens, because if I need the market extending, I need the market extending to the 161.8 extension. When I fail inside the market, I need to fail for a lot of points. So I don't like to fail just by a few points. In this situation. In this case, I have a quote, and I believe some of you are already familiar. If the bat pattern fails you, just grab it. And if so, the bat pattern is printed. The bat pattern is printed at 88% retracement. Usually when I see the market failing the 88% retracement as a potential reversal behavior, I will wait for the 161.8 extension. And from there, I will use the same retracement level. I will adjust that level above. Let me just try to push it. And from here, I will target the 38% retracement, which is synced with the previous structural resistance. So
what was that saying again? That was classic. If the bat fails, crap.
Just scrap it, because there's the market tends to extend to the specific extension level, to the 168 extension, which is the formation point or the completion point for the grab pattern, because one pattern gives sequence to another. So it's a very simple pattern, that a reversal BAT pattern. The BAT pattern it requires a 50% retracement for a point B. So let me try to print that.
I've never heard that before. Have you, Steve?
No, but I was thinking that if we want to be politically incorrect, we can paraphrase it. If the BAT pattern fails, you can crap it.
I love it, man.
Yeah, but it's how the market usually behaves, unless the market feels some pressure at 113 extension, which is the alternate BAT pattern.
That's a Cardosoism.
Yeah, Cardosoism.
But well, at this point, since I have failed the 88% retracement, I was expecting, actually, and being honest, I was expecting the market to trade even higher, extending to that level. The market has found some resistance at 113 extension, and if the market decides to recover below this 88% retracement, well, I believe there is a possibility to trade the 38% retracement or even below this level, with the 200 moving average also approaching from below and pointing like to the 50% retracement. I believe this is a level to search for support if the market decides to
so Andrea, I think we have to let Dale start his interview. Thank you very much for sharing really nice stuff with us.
Great.
And
Thank you very much too.
Great Cardosoism, man.
Yeah, very true, very true.
I love
it. And I reiterate, you'll have the opportunity to join us tomorrow,
the day after tomorrow, no problem.
Yeah, the door is always open for you. You know that, Andre. And for our friends that want to join ForexAnalytix, as you see, besides trading, we also have quite a lot of fun, and you can see that in the chat room as well. I think we have a very nice climate, and I think you also enjoy your presence with us. I also want to give a little bit of a hint. There's going to be some nice functionality that we're going to be releasing this week. A new little tool about market hours for all the big markets, and there's also going to be some very nice MetaTrader functionality that we're going to be releasing within the next month. So a lot more things in the pipeline. Stick around, and you'll get to see them one by one. We like to remain active. So, Coach, enjoy the interview.
Okay, and Andre, Scott Henderson is a fan of yours. He's told me that before. He said you should do a class just on how you use fibs. He's planting seeds. So thank you, Andre. Thank you, Andre.
Thank you.
Oh, you're very welcome, Steve. And Shintan, it's your time. And I'm making you the presenter. I'm, been watching your work for a long time, and I'm very interested in seeing what you're seeing now and looking forward to meeting you.
Check.
You're good. Hi, Shintan.
Hi, Dale.
Hi. So, gosh, I don't know. How long have you been tweeting charts in this stream?
So, I think it's around 1.5 years. I'm tweeting on your stream. So, like you, I am a big believer in social trading as well, because I learn most of the tricks from tweeters and the webinars available, like ForexAnalytix kind of webinars available on the net. So I think that if I tweet on it, then I can get some comments back, and that will be useful to me, and that will be useful to some newer traders as well. So
okay.
that was the reason behind that.
Yeah, it's nice to finally meet you.
And happy New Year to you and the whole ForexAnalytix community.
Thank you very much. You're part of it. So I hear you're here in phase a lot. Blake says you've been a long time listener. I'm glad that we've added value to whatever you're trying to accomplish, and obviously what you're trying to accomplish is pull money out of the market. So how long have you been trading, Shintan?
So I am in this business since 2011.
Okay.
So it's been seven. This is the 8th year I am in this business.
Okay. And how did you get started?
So
What was the catalyst for you doing it?
Basically, I was a finance student, and I was in UK around in between 2009 to 11. So during that time, so that was the crazy time.
Yeah.
Being a finance student and finance professional like you and some older guys. So
Oh
that
yeah.
was.
Thanks a lot, man. Hey, hold on. I have to adjust my cane just fell on my foot. Let me. So you were there, right after the big crash, or we were
Yeah.
bottoming in 2009. I bet you were
Yes.
in school saying to yourself, maybe I
More.
took the wrong
Yeah.
major.
Yes.
Finance, right? It looked like the end of the world of finance back then. So, all
Yes.
right. So you were a student, you got a degree, and
So that was the time, and then during my thesis, I found trading interest. I did my thesis on trading and stuff. So then what I did that I took a job in one brokerage firm, Alpari.
oh,
Okay, yeah.
uh-huh.
So for there, I stay for 3 months. And then I suddenly decided that it's better to start with own trading and just go into the role and just go into the practical world of trading. So then I came to know that at that time I was in India, so I came to know that there are some regulatory stuff behind this forex margin based trading by Reserve Bank of India. So somehow I am managed to set up an account with my friends, and then I started with him, and then I suddenly for first 2 years, like 2011 to 2013, I was struggling in trading, and I was just moving from one tool, one instrument to another instrument, and one tool to another tool. And then suddenly during 2014, at that time I saw Black and Nicola Duke on Twitter. I found him, and then I started watching Black and Daily FX team members. So from there, things started to work for me. So I am just watching that how they are doing analysis and how they are managing trades, and so I can say that these are the
They're your
teams
mentors.
from where,
They
yes,
were your
from where
mentors,
I learned.
whether they
Yeah,
knew
yeah.
it or not. Whether they
So
knew it or not. Yeah.
yes,
Okay. So let's see your setup. I'm looking
yes,
at a Twitter page right now. I'd like to see.
yes. So you can see my charts now.
Okay. So you do a lot of different stuff. I noticed on your charts.
So
Go ahead.
Yeah, as I mentioned that I learn different tools from different traders. I learn Andrew Speechfork from Jamie Satterley, and then I learn basic technical analysis from Blacks. I learn RSI from Michael Bochers, and then pivots from Taylor Real. So I decided to use 5 or 6 tools, and I learned Fibonacci from Nicola Duke. So I decided to use a combination of 4 or 5, I can say, tools to find out the support and resistance confluence. So that's why I am
Okay.
doing a few things here to analyze the market.
Do you give any of them any more weight than the other?
Not exactly, but I can say pivots and Fibonacci are the things from where I am starting to analyzing, and then I'm more often I'm using pitchfork instead of trend lines. So these three are the main tools, and I'm looking for confluence of these three tools. Like you can see here, like this is the Euro USD charts.
Right.
So this is the weekly chart, and
So it's an either or still.
yes. So this is the weekly chart. You can see one downside pitchfork over here and one bullish fork here. So we are in this bullish fork. We are at this exact bottom of this lower median parallel. Okay. So this is the perfect confluence over here. So that's why we are ranging over here. So this is the pitchfork stuff I am looking over here. In between, there is some Fibonacci confluence over there, and in with this confluence, say this is the range market, and I have never traded this USD since we are around here, because this is the pure ranging market. So I am looking for you to trade euro above this or below this level. So if we close above 1.1532, then I am looking for some pullbacks to get long for these targets. Okay, and if we close below this level, and then we can see then I can take short over here for first this and second this target. So this way I am finding my different support and resistance level, and I just draw it over here, and then I am taking help of RSI, and I am a big believer in multi-time frame analysis as well. Like you see, this is my core screen, you can say. There is a weekly over here, there is a daily time frame over. So see, over here there is a different pitchfork running on, where we are at the support. Over here I have some different fork running on, so where we are at the underside of this broken pitchfork. So if I have to sort, if I have to sort this, yes please.
Oh, I just wanted to ask you, using the euro as an example, do you go with the breakout intraday, or do you need a candle close to confirm?
Yeah, I am mostly I am looking for candle close.
Okay, all right.
Okay, so like see, there is a breakout over here. You can see in a weekly in my feed there is a breakout over here, because I don't know. This is the 31st December price action. So in some price feed, this is not there. So there is a breakout attempt over here, but suddenly price came back and it didn't close above here. So if I take a long over here, then I might be trapped over here. So I am looking for weekly or daily close above there, and then I can plan my entry in H4 or lesser time frame.
Okay, so I saw some type of harmonic pattern on one of your charts. Do you use those too? Harmonic?
So these are some stuff I am harmonic is not my cup of tea actually.
Okay.
So I am just learning. I stick some harmonic pattern here on my desk.
You only give it a shadow anyway. You only give it a shadow, so it doesn't mean that much. It's very, in very light color. Just in the background for you. All right.
Yes.
So kind of see that the euro is an either or. What else is on your radar, buddy?
So considering this euro chart, I have actually 10-12 charts ready right now for January trading. So I am looking for DXY. So this is the core DXY, because any trade, any major pair, if we are trading, then we have to look at this first. So I'm looking. No. So there is a pivot support over here.
Yeah, the pitchfork where 94 and a half.
So there is a confluence and pivot support over here. So so there is one Fibonacci support, 94.20 Fibonacci support, and pivot over here. So I'm looking for this zone to get supports, like as I am mixing some sort of fundamentals, and as we know that Fed is right now backing with the rate hike stuff. If they back with this rate hike stuff, then we can easily achieve this or this target. Depends on the volatility. So DXY, I am looking over this. If I have to buy, then I am looking for these zones to get longer. Okay.
Okay.
And
All right. So not long now, but bias is to buy a break towards that confluence of pivots and
exactly,
everything. 94, 94, 20.
exactly.
All right, you're recorded, so you know this is recorded. So when we're at 94.20, I'm gonna retweet the video.
Sure.
And then you'll be under all kinds of pressure. All right, no, I'm kidding you. So all right, so we have okay, let's talk about cable with all the votes coming in and stuff.
Yeah.
Are you trading it during all this Brexit noise?
I have traded cable couple of time. So I have some sorts going on from 27.14, and I book around 25.60, because see, I have marked over here that this is the key level, because this is the I sometimes I'm considering this weeks as well, if it is larger scale. So this is the key level for me. 25.82 is the key on a weekly close basis. So I just booked over here, and then it was not in my time zone when this flash crash, little flash crash happened, and then suddenly it comes up and it closed over here.
So do you ignore the wick now, or the wick is important to you? So you know, if you buy a break in cable, you have to risk the wick if you pay attention to it. Otherwise, you'd pay attention to where the bodies come in, like at 125.80 or so. I see you do. I see you do, because you say it's a key on the weekly.
So depends on the situation. So like if I have to if I have to put a Fibonacci right now, then I can I'll put over here. See, I'll put over here. I'm not going to put it over here. Because the time span we spend during this moment is very less compared to time span we spend over here. Okay, so I'm not going to consider this week to put any Fibonacci and to consider my trading.
Okay, all right. And so a lot of currency stuff from you. Any view the metals have been? I've seen some. Are you strictly currency?
Regarding metal, I have some stuff. Actually, I drawn some longer term stuff in gold.
Yeah, I've seen some gold tweets from you, right? Like you're bullish, and you're viewing, like, you know, I remember you called a pullback correctly, and that pullbacks are buying opportunities in the gold.
This is the longer term chart, weekly chart. I'm looking for inverse head and shoulder over here, and I am looking for this resistance, and then looking for some sort of pullback, and then planning long over here. You can see I have some alarm set over here. So from this zone, I am planning for long. So this is the weekly chart, and the target is comparatively high. So as we know, the fundamental situation right now, and there is some risk with the USD. So this might be the scenario. If a USD dump across the board, then this should be the play on the long side.
It'll measure to the top of the pitchfork up there around 1600 the next year or so. Is that kind of what you're looking for if we break out over 1360?
See, actually, the perfect target of this head and shoulder is over here, but I am but I can't take I can't take a long over here and then just wait for here. So I am basically doing in and out. So like I can take sort of long over here, and then I booked over here. Then I am looking for pullback towards here, and then I may be booking over here. So like this way, and so this is the weekly chart. So I'm taking entry and exit. So this is this is the daily chart. So over here, in this confluence, I'm planning to take a long. So,
Okay.
and then
Between
I may book this long over here 1307 because this is a very nice support 1307s, and once it's broken, it provided two resistance over here and then start fall back from here. So
okay. So
and
we
I
have the
booked
bullish. We have a lot of the bullish scenarios in here. You know, the important question, and I'm sure you ask yourself, is what would negate the bull case in gold? I'm thinking back under 1240 would do it. What are you thinking?
So exactly same in line with that I am thinking. So over here I have set one alarm as well, because see, this is the former high 1250 is the this is not exactly the psychological number, but this is a big figure 1250, and I have set alarm over here, and there is a 200 DMA confluence over here as well. So once if we daily close beside this, then I can consider that we can come pull back a little more than what I have thought.
Okay. Yeah,
So this
maybe
is the
back
bullish
to
1250 is the bullish invalidation for me, and this 1270 and 1260. So these are the two level where I can take long.
okay. You know, crude had a big crash. I don't know if you were there for it. Do you trade it?
I am
If you
trading
don't,
crude.
it's okay. You trade crude?
Yeah,
Okay.
yeah, I am trading crude, but I am not trading this WTI. I am trading crude in Indian market, so that is the different. But I have to go I have to analyze this to get a hand on this. Wait a minute.
Did you turn in all your 100 rupee notes a year or so ago?
Yeah.
Huh? Did you
Yeah.
cry?
No.
You didn't cry at all? Oh my
No.
God. See how much
So
faith you have? Huh?
this is the US oil chart I'm tracking since last 1 year, and this is the fork. So bullish when we broke over here, so it's bullish invalidation for me. And right now I'm looking for selling the rallies. Okay, so this is the first level where I want to start, because there is a 200 DMA and some Fibonacci confluence over there as well in daily time frame. Okay. So and we have monthly R1 resistance over there. So I have marked over that LR sort, that is low risk sort. If I have to sort over crude, then I will sort over here, not over here or anywhere else. So I have to sort it around my first attempt to sort crude is 52 52 and half, and if we broke upside, then I may look over here at pivot or this R2 confluence of zone. And if we pull back from this level where 200 weekly moving average is, then this is the zone where I am looking to book it, and I have to flip my position towards long side.
Okay. So, you know, people that I've gotten a question for your Twitter handle. Shintan's Twitter handle is @Shint, CHINT_info. So let me ask you this. You don't have any kind of business model or axe to grind. Do you manage other people's money or just trade your own account?
No, I don't have any website, or I am don't have anything like that, but I am managing a few of my friends' account,
Okay.
like in the family friends' accounts I am managing. And besides that, I don't have any kind of social besides any paid services or something called services like that. So that's
let me ask you this, because I've managed OPM. Do you notice any type of different emotion trading other people's money than trading your own? I always found it easier to trade my own than other people's money, because you kind of have the emotion attached to, you know, not wanting to hurt them. How about you?
Yeah, that's right. Because if when we are trading our own accounts, then we know what's the situation in what's the expectation, what's the minimum basic expectation we can set from the market. But when we are trading other people's money, then we have some sort of things calculating in our mind that I have to show them this sort of performance, then I have to be at above the par level. So there are some sort of psychological pressure behind
Yeah,
that.
right.
But uh, see, the thing is that I always set. I always tell my friends
You
that
represented the
this is not the
risk.
quick. Yeah,
Yeah.
this is not the great quick risk scheme kind of scheme. So I always talk with them before taking their account into in trading. So
Okay.
then they realize that okay, these are the thing. And what else that I also recommend them that just start with the lesser amount, and then if you feel comfortable and if you find your own expectation, that if you're satisfied with the performance, then only you can start with the bigger size of accounts. So this way I am dealing with
Yeah, you're not selling blue sky like a lot of people out there on the internet. You're representing risk, and therefore,
yes,
buyer beware, but the seller has to make the buyer aware. So that's not just
yes,
buyer beware. It's our jobs to make the buyers aware of risk and that it's risk capital and it shouldn't be their rent or mortgage money or anything they need.
yes,
Shintan, you know what I used to do? I used to tell people, see that check you're funding your account with? Strike a match and light it up. And if that makes you nervous, it's not risk capital. So, you know me, I'm a dramatic guy. So, it was really a really a pleasure getting to talk to you. Please, I really appreciate your content in my stream. I continue to welcome you to, edify people in at Forex Stop Hunter and wish you all the success in 2019. My trading
thank you,
warrior brother, and want to thank you for taking time out to address FACE today.
thank you. And hello.
Yeah, I'm here.
Yeah. Before quitting, I just want to show one more charts
Oh,
because
sure.
because I know I heard that some people are asking about Nifty. So as this is the chart. This is the index. Being in India, I am looking for. So this one chart I want to show. So this is the Nifty benchmark index, Indian.
Right.
Yeah,
You're looking
and
for a right shoulder here.
yeah, so I am looking for right shoulders over here, and we have perfect confluence of yearly pivot over here,
Yeah.
and we have a 50% fib over here of this huge leg. So this is the perfect. If it has to come down, then this is the perfect place to come down from this level. And this is the primary level of my target. So I have just mentioned support, and if we come here, then we have a nice head and shoulder at the top of this huge rally. Then we can plan some bigger short target over here. So this is the one chart I want to show.
Okay, that's a beauty to wrap it with. I really love it.
uh,
That's going to be your tagline. I'm gonna share with people what your view is on the Nifty, and I want to thank you again, Shintan. Great to meet you finally after all this time, and again, continued success with you and your clients that you're trading, and thank you for sharing your knowledge on Twitter with people without asking for a nickel. So you're planting good seed. I know you'll reap the harvest.
thank you, Dale. My pleasure, and I'll continue doing that.
Okay, buddy. All right, everyone. That's Shintan Patel. Then you could follow him on Twitter at Chin underscore info. And you'll see his video up there on Twitter. And I don't know, Bellew is very fast, probably 3 hours or so. So that's Turnaround Tuesday for us, everyone. See you tomorrow. If you're a cable fan, Lydia Idem Finkley is going to be here at Faith Might, and the whole crew, the whole FX Analytics crew. You know, the sale starts tomorrow. Immerse yourself with this trading community. I don't think you'll regret it. And because I've gotten better hanging out with these guys the last few years. So remember, don't just count your pips, count your blessings. Adios, and see everyone tomorrow. Thanks again, Shinten. Good hunting, my trading warrior brother.
Thank you, Dave.
Adios.